Good morning, everyone. It is Wednesday, September 3rd. It is the second day of trading this week. We had Monday off. And I don't know about you, but I feel a little out of place. Yesterday I thought it was Monday all day, but it was Tuesday, and today it's Wednesday. But um, it should be an interesting day for the stock market. Yesterday we had a pretty solid sell-off, and toward the end of the trading day, it softened up. Some stocks began to, regain some of their losses, and some of them even ended up in the green. But it was overall a red day, especially for technology stocks. Some stocks, like in healthcare, did better. Consumer staples did okay. Energy did all right. But we'll see what the market does today. It's supposed to open a little higher, and we'll see if the stock market cooperates with that expectation. Looks like Saeed is on. Good morning, Saeed. With me is Daryl. How you doing this morning, Daryl?
Doing wonderful, Victor. Good to see you. Hello, everyone.
Did you have a nice 3-day weekend?
I did.
Good. Me too. I attended a nice party on Sunday.
Yeah,
Good
how'd that
food.
go?
Man, I am a fan of potato salad. There's some
Yeah,
things that are simple and good, and potato salad's one of them.
yeah,
Everything else was tasty too, but for some reason, when somebody makes good potato salad, I pay attention.
yeah. You can't go wrong with that.
Yeah, yeah. So I like outdoor barbecues and good times. So anyway, back to stock trading. Good to see you, Carlos. Good morning. It is a little early in your neck of the woods, and I appreciate you attending. So, Daryl, we have a lot of good stocks to take a look at, and looks like Shadow Guy is on. I've had German style potato Shadow Guy. There is a German delicatessen near my home, and it is a warm potato salad that is delicious and knocked my socks off. I'm going to go get some of that salad this weekend. We're going to have football games, and I'm going to have some German potato salad. Thank you for the suggestion, sir. We also have this bratwurst place. That's a delicious bratwurst place that started maybe about 10 years ago. So, yeah, maybe I'll do that and some potato salad. Thank you. Justin, great to see you. Top of the morning to you, sir. All right, let's get back into stocks here. Everybody, if you're new to the channel, you get two flavors of stock reviews here. You get fundamental analysis. I will be handling that, taking a look at the quality of the business. Is that business growing its revenues? Is it profitable? Do they generate cash flows? Is their balance sheet good? How do they value? If you value the intrinsic value of cash flows, what is the value of each share compared to the stock price? And what is the value of the profits? I'll do that type of analysis. Then I'll turn it over to Daryl, who will look at charts, and he's going to look at charts. What has been happening with the stock? Has it been overbought, oversold? What is the pattern he's seen? And that way you get both overall impression of the business. Is it a quality business? Is it a desirable business? You also see, how's the stock trading? Is it potentially a good opportunity to consider, or is it completely overbought? Maybe it's teetering on the edge. So you get that double review, and I certainly enjoy listening to Daryl. Hopefully you do as well. So let's get going. So a couple of stocks that would be interesting to take a look at. I wanted to start with, if I could, United Therapeutics, and just kind of talk about this stock really popped. And I was really curious to see what Daryl thought on the charts for United Therapeutics. This company had very positive news. Fundamentally, I think it's a really good company. I own it. I'm going to continue to own it. I think they're going higher from here over the long haul. Can't say that it's going to happen in the next couple of days because it just went up 32.83% in one day. But Daryl, maybe I could get you to comment on when a stock really moves this fast, how do you interpret what's going on? And what would you think is likely the path forward for a stock like this?
Okay, so it did peak out in November of last year. It looks like it broke out above that and then maybe actually closed just south of that a little bit. It went from an RSI of 50 or so yesterday up to 83, which is overbought. But if you look back in June of last year, June the 12th, it went into an overbought condition and pretty much was in overbought with the exception of a few days all the way through July. So 6 weeks, 5 to 6 weeks, it was in overbought territory. And in that time, it went up basically around 20% over that 6 weeks, even though it was in overbought. It's been in overbought in December of 2023, just for 2 or 3 weeks. Once again, when it hit this peak in November, it was overbought for 2 or 3 weeks. This candlestick shows that the price ran up to 440 during the day after opening at 419, and then it closed at 404. So there was some selling throughout the day. And when I look at the money flow was extremely bullish yesterday, and there must have been a lot of people taking profits because the money flow was actually negative by the end of the day. So, but the price didn't pull back that much considering. So I don't know anything about this company other than what you've told me in a few minutes, but I wouldn't be opposed to holding it here for sure.
Yeah, I mean, I just think very highly of this business and will be a long-term holder. It's just curious. I was curious to see, how do you take such a big day into account as you look at the charts? And that was really interesting. We'll see how it plays out, but yeah, I'm sticking to it. Um, if you wouldn't mind, can we flip over to Google? I'll let you keep the screen, and if you could go over Google because they're having a pretty nice morning, and then we're going to go over some requests from Saeed and Shadow Guy. But would you mind going over Google, and then I'll look at the fundamentals after you?
Sure. One more thing we could look at on United Therapeutics is the volume. They traded a little over 3 million
Uh-huh.
shares yesterday, and they usually trade about 635 on a 50-day average. Okay, so we can take a look at Google on the intraday. So yesterday, on the release of the legal challenge that they had against them, they shot up from the close at 211.99, and they were as high as 229 in the aftermarket within 1 hour. They traded off throughout the rest of the aftermarket and were trading off for most of the pre-market, but they seem to be climbing back up at the moment. So let's look at the 1-year daily chart. And this is one I started accumulating back in June.
Nice.
So I've had a pretty good run. They're higher than their 20, their 50, and their 200-day averages, which are all sloping upwards. I think that's going to continue into the near-term future. They did break above a recent high in 2025. By the way, these are all-time highs, these prices
Mm-hmm.
over here. They did break above the 208 level back in February before the sell-off due to the tariff announcements. They are in overbought territory slightly. The RSI is at 70.14. Looks like they were a little higher, maybe 78 or so back in July. PPO has been somewhat flat since the end of July. They are outperforming the S&P 500 on relative strength, and it looks like momentum just barely under the S&P 500. Accumulation is at a 52-week high. Let me run this back 2 years and see if that's holding for 2 complete years. Yep, so at a 104-week high, actually. So that looks very strong to me. The money flow has been positive since the end of June, and they're outperforming the S&P 500. Communications sector, they're pretty much even. And the network, internet, they are underperforming that industry group. Let me go back to, I am on a year. They are underperforming slightly, and that group is outperforming the S&P 500. So Google's looking very strong to me, and they are undervalued, I think, which you're going to talk about next.
Yeah, I've been saying that for a while. It's not I'm not a Johnny come lately. When we look at Alphabet, just starting off, you look at the PE ratios. If you look at the top 10 most expensive companies or biggest market cap companies, they're all in the mid 30s, except for Meta. Meta is around 30, but you have stocks that are up at 100 PE, where Google is at 22. 21 for next year. And those are really good. That's below the average S&P PE, which is 25, 26. And the stock, I really like this trajectory they have on this stock. I really like this chart. To me, it's going to end up at $300 a share. I think it's going to end up at $300 a share in the next 12 to 18 months. I think it's just going to continue to go higher. When I look at the valuation, it's discounted. It was discounted by, let's take a look at the discount overall. %. If it opens 7% higher, obviously that's going to be more like 17%. And the thing about Google is once you remove some of these stories, right? Okay, you're not going to remove Chrome. They're going to have to share search data, which isn't all that hurtful to Google. The competitors are still going to have to figure out, okay, how do we get users to use our platform? Because the preferred browser is Chrome, and Chrome is everywhere. Like I use it on my Android device. Obviously I use it at home. I'm unless there's a alternative that is going to give me more features, value, function, why would I switch? It's a browser. And I think it gives them a huge competitive advantage in the AI race, because I was explaining this to somebody. OpenAI, I get that you can download the app on your phone. Got it. So on a phone, I think we're kind of an even playing field, OpenAI versus Gemini, although Gemini is the advantage on any Android device because Google owns Android and they pretty much preload Gemini on Android devices. But on a browser, if you want to use an OpenAI, you're going to have to go through Chrome. So it's almost like if you were in retail, you had a retail outlet, you competed against Target, but your store is in the middle of a Target. It gives Target an advantage because at least your consumer can take a look at what they have on the shelves as they reach your store. Not necessarily that much of an advantage, but Google does control Chrome, and that's the preferred browser. So that's good for their AI business. As we operate a few quarters, and if Google can continue to grow top line revenue, I think the other story, which is AI is going to disrupt, take away search. And my answer to that is search was always going to evolve. And right now, I think Google's doing a pretty good job of evolving, using its dominance in search to introduce their AI business and introduce a new, better way of searching for data. So their dominance isn't going to go away overnight. Worst case scenario is they're still dominant for 5 years, and they have to figure out how to remain very relevant and competitive, which I'm confident Google's going to do it. It's a really high intellect, high ability to execute company. They have the resources to do it. So once we get, that story to be more concern than it is reality, I think this stock will really, really work because their growth is excellent. They're massive scale, 371 billion. So when they grow 13%, we're talking about $40 billion of added revenue, added profit, added free cash flow, the proportions to that revenue. And their cloud business is growing really fast. They have Waymo, that's physical AI, and that's real. They have cash they could deploy to be a player in the AI race. So this one here, I'm going to say that, in the next 3 years, 4 years, Google may become the most valuable company in the stock market, overtaking Microsoft, Apple. I'm not sure if Amazon's ahead of them right now, but I expect these guys are going to be a $5 trillion market cap company because their business is set up so strategically. Their assets all complement one another. Chrome complements their AI business, complements YouTube. Oh yeah, YouTube, number one streaming, platform on earth. Friday, they're going to show a football game to all YouTube users. Isn't that going to be cool? All YouTube. So you want to watch football on Friday, Chiefs versus Chargers, you can do it on YouTube. That's going to be great. And then they have their Android. So they have an operating system for handhelds. Well, isn't that convenient? So now they've got that business that's going to help their AI business, which helps their browser business, their search business. Everything's kind of complements one another. And I can go on and on. End of the story is that I think they're discounted, and strategically they just have they have a very desirable plan for their business. They've been doubted, which is kind of incredible to me. It's like, if you want to doubt a company, doubt somebody who's like failed repeatedly. Like I can't think. I'm going to pick on Macy's, not because I dislike Macy's, but because it's just such a tough business, right? Retail. Yeah, you could doubt Macy's because it's real. Everybody's moving to e-commerce, and you could say, wow, it's really tough to be a retailer these days. I agree. Nobody at Macy's is doing a poor job. It's just the market moved away from retail. But when we deal with Alphabet, the doubting has kind of been unbelievable to some extent to me. I'm like, really? People are doubting Google? Of all businesses, like there's a couple businesses I'm not going to doubt. Amazon, Google. Remember when they were doubting Meta in the market? The market was really taught a lesson back then. All those who sold off on Meta and said, oh man, those guys are terrible. Man, the worst company in the world. Or Netflix, or you name it. You have these situations where the market creates this opportunity. That's what it's really doing. It's saying, hey, would you like to buy a great business at a discount? Yes, I would. Okay, well, now that business is worth 709% more over the course of 2.5 years. So not as extreme here because this just is a lovely chart. But Alphabet, I think, is going. I think the stock price is going to go to $300 a share, and at some point, this thing's going to be competing for the most valuable company on the stock market. So that is Google. Excuse me. I like Saeed's comment, and I agree with it. Google and Amazon are like an ETF. I agree, and it's almost like a very well put together ETF of assets that have reasons to be with each other, especially Google. Amazon is a little more eclectic. They have e-commerce, they have this massive cloud business, they have a streaming business, but they make it work. Like the streaming business is an example. When I first heard they were going to do streaming, I thought, well, that's kind of crazy. It's an e-commerce company, but guess what? We're prime, household. So we got video. And it's like, man, that really worked. They're already getting us on, the platform. Now they have their advertising business, both on their platform, e-commerce platform, as well as their streaming. They started doing football games. So I agree. That's a very good observation. I agree with you, Saeed. They're like a really solid ETF. They're so darn big. Yep. Fabricio, very nice to see you. Thanks for joining us. All right. So we handled Google Alphabet. Now we've got some requests to handle. Let's go over, we're going to go over Campbell Soup. Then we're going to do AU and then ANEX. Campbell Soup. Who hasn't had a can of Campbell Soup? I have had many cans of Campbell Soup in my time, and these guys are up 3% pre-market. They announced their earnings, and it looks like they had a beat on earnings. Tariffs will be a headwind. All right. So I guess that earnings beat was enough to help this stock rise. Year to date, not a pretty sight. I think part of it is, the growth stocks have been doing so well that who wants to buy a safety stock? This is a food stock. This is a consumer staple stock. So these are the ones that look decent when everything else is terrible. Growth stocks are selling off, and Campbell Soup looks good. Has a really nice dividend of 5%, but I don't use dividends, with one exception on REITs is where I use them for valuations, but I just ignore dividends from my valuations. But some investors really like income, and 5%'s got to look good to some investors, especially if you think, this is discounted potentially. And over the 1 year, 36.7. So it hasn't really had a very good year. And it's had better times. Like this is when, if you recall, in 2022, we had a very bad bear market. Growth stocks. I mean, I just showed in Meta a few minutes ago where they sold off. A lot of companies sold off in 22. Campbell's went in the opposite direction. It went up. So investors were really wise to see that, hey, in a bear market, I want to hold Campbell Soup. So if a bear market starts coming, not a bad place to go. In the meantime, let's take a look at their business, see what they've been doing. Now, they've been growing at a good clip. Now, the most recent quarter barely grew, but they had some good growth back here in Q4 24, Q1, Q2. They have a fiscal year that just ended. That's really good growth. That's looking pretty good. When we look at their gross profit, I think is going to look pretty good too. Let's take a look. This is a food company, so we're not dealing with technology or biotech like United Therapeutics that has almost 90% gross margins. This is a 30% margin business because they cook food, they put it in a can, deliver it to its customers through stores. So this is all kind of normal to this consumer staple company. All right. And cash flow looks okay, kind of stable, not growing, just nice and stable. So this is a stock for those that want income. You could probably value this stock. Let's see if I have a valuation on Campbell Soup. I don't. And it's not a stock that I want to cover very closely because I don't know that I'll ever be buying Campbell Soup. I think that you could probably get close to that valuation at 700 million in cash flow. Let's take a look at the balance sheet just to make sure I don't see any problems there. Balance sheet. So they have $6.1 billion of debt. They got to have some cash there. Debt to EBITDA is 3.85. They do have high debt. If I define it as 3 is the maximum, they're above that 3 maximum. So there's a little concern on the balance sheet. And you can probably get to this valuation if dividends are really important to you. They're not important to me. So it wouldn't be a stock that I would own anytime soon. I have other alternatives if I wanted a dividend, and this is not one that I would probably consider. Look at that. It's doing better. 3.69 in the pre-market. We're going to open in 3 minutes. Let me let you take a look at the charts on Campbell Soup.
Yeah, the one thing I've learned, because I'm a dividend investor, income investor, but when you look at, you're getting 37 cents, 39 cents per share, and then you're taking a $18 price drop over a year. That makes the dividends not look so good to me. So I think there's better dividend stocks out there. I have some dividend stocks that are paying probably 3 or 4% more than this that are actually appreciating in price. So I like those much better than I do something like Campbell's. So we've been on a pretty significant drop. We haven't even broken above this downtrend line. So they may stabilize here. I don't know if they're going to break out above that line and regain any of these losses.
Mm-hmm.
One other thing that I see here is there. Whoops, that was the wrong kind.
Now Campbell Soup is up 4.64%.
Well, what am I doing wrong here? There we go. I'm looking at the price by volume bars.
Mm-hmm.
This is where most of the buying was. So even if it does break out, it's going to face a lot of resistance as it gets into this range here. There are people that are going to be want to be selling, in my opinion.
Mm-hmm. Maybe kind of limit their losses, or
Yep.
they're like, hey, I bought it low and I'm going to take a nice gain. Okay. All right. The market's opened. Let's take a look at the next request, which is an Anglo Gold. And I've never looked at Anglo Gold. And gold does come up because it's been doing really well over the 1 year, year to date. Geez, 160%. 1 year, 100%. Wow. These guys are getting it done. Market cap 29 billion, revenue 7.65 billion. Looking at the 5 year. So gold was kind of not doing great, but boy, it really has taken off in 2025. I'm not sure how to interpret that, but most definitely this company is doing great. So these guys operate as a gold mining company in Africa, Australia, and the Americas. Okay. Interesting. Was there like a big news story, like they struck a new mine that has a lot of gold? Oh, here we go. So I guess their mines are really good and investors are liking it. So this one's been working. I've never been a gold investor in companies that mined for gold or bought gold. I know a lot of people like it. Can't argue with it. I have friends that like gold. They part of their portfolio is in gold, and it works for them. Let's take a look at their fundamentals. So these guys PE ratio 15.27, forward P 11.75. They are a little expensive. No big surprise when you have an appreciation of 158% over a little over 8 months. Yeah, it's probably a rational statement to say that they're a little expensive. Now they are increasing their revenues, probably due to both volume and the price of gold has gone up. So look at that, 54% growth if you look at the trailing 12 months. So that is exciting the market. The cost of revenues there, so I guess they're about 40% margin company. Let's take a look at that line. So 43.34 gross margins, and then the cash flow. Look at that, $1.7 billion of cash flow. So times are good. Times are really good for Anglo Gold. Forecast. Got 5 analysts. They all say, well, one of the analysts believes it's going to go down to 35. One analyst thinks it could go up a little higher to 63 on average. It should be priced around 47, which would be a decrement on the price. Now, the good times are not going to last forever. They're expecting that revenues will contract going forward by a little bit. Now, they'll contract a lot if gold prices really drop. I don't know if they're going to drop. I don't know if they're going to go up. We'll see. Earnings per share look good, but this looks a little risky to me. The stock's really high, and the best times are kind of present and in the rearview mirror. Recently, they did great. But you could see a year like this up here where it goes down 12%. Boy, this stock can really come down. So I would, on this one here, I would probably be thinking of, what's my exit strategy? Because, okay, mission accomplished, more than mission accomplished. This is a great performing stock. I can understand that an investor would be, contemplating, do I stay on this rocket ship ride? Can it go to 200%? Or is it going to begin to go down? I would think about an exit strategy that aligns with your intent with your portfolio. My intent is to do great every single year and diversify. I look at intrinsic value for a company. I try to project and forecast where I think the company's going and then make rational decisions. I've recently made a decision on a stock similar to this, but different. And I've taken a third of that position off. I've sold it and took a lot of risk off. That could be an exit strategy. It could be complete sale of the stock. It could be hold on to it until it goes even higher. It might be a long-term strategy to hold a gold miner like this. But I would encourage anybody who owns it, think about it. Think about, what is going to be your plan, and does it align with your overall structure of your portfolio and what you intend on your portfolio to be? We're building portfolios that are kind of like you're building a structure, strong foundation of good stocks. These are good valued stocks that you want to own for a long time. And then you build things on top of it. It may be a short-term investment that you think, hey, it'd be good to own this one stock, but it might be an investment that you make for 6 to 12 months. And this one here, how does it fit into your strategy? For me, it would be, wow, this is great. I want to take some of the gain at least, or I'd probably be selling. So that is Anglo Gold. It's performing great. It's doing great today. 3.5 rise. It's up 160% year to date. Looks pretty good to me, Daryl. What about you? What do you think of Anglo Gold?
Yeah, the chart looks pretty strong too. They are getting into an overbought condition, but you can see they've spent several weeks in a row above an overbought condition. Their accumulation distribution is at a 52-week high. Money flow is positive, and they're really doing well on outperformance of the S&P. The materials and PM is gold mining. So that industry, they're beating that industry by 75%, and that industry is strong. Like Victor said, this wouldn't be a good one to ride for a while, but make sure you have an exit strategy in mind.
Yeah, this must be a exciting stock to own, to have it go up that much. It's pretty phenomenal. All right, so let's switch over from gold over to StoneX, and StoneX is StoneX Group, symbol SNEX. Operates as a global financial services network that connects companies, organizations, traders, investors to market ecosystem in the United States, Europe, South America, Middle East, Asia, and internationally. The company operates through 4 segments: commercial, institutional, self-directed retail, payments, commercial segments. Okay. So they do capital markets. Now, I'm not familiar with the StoneX kind of brand, right? It's not like Charles Schwab, kind of Robinhood, Interactive Brokers. So these guys do institutional grade financial services. Okay. So I guess they sell securities to institutions. That's why I haven't heard of them. And then foreign exchange. Okay. Now, a lot of these companies are doing really well because the markets have been doing great. Stock prices are higher, more volumes, and these guys are benefiting from that. No big surprise. So I understand what they're doing. Let's take a look at their fundamentals. So year to date, they're up 56%, 1 year, 85, 5 year, 306. Wow, incredible. And they're a small cap, 5.36 billion. Interesting. Okay. Let's keep going here. So they have a lot of revenue. So they're handling a lot of transactions. They are profitable. PE ratio 17.4. Forward P is 14.6. Okay. Analysts think it's a buy. So looking at their growth, revenue has been growing really well. In 2024, it grew by 64, trailing 12 months growing by 53. They did have a year where, and they have a fiscal year that ends in September. So that year, had some of 2022 in it, and it didn't do so great, which was a bear market. And this one had a little bit of 2021, which we were in a big, strong bull market. So it's been a business that has seen years when revenue has contracted quite a bit. So be aware of that this is not and other broker service businesses are like that. And that's expected, because if you have a bear market, people don't want to trade. They will probably be a little more passive, maybe just sit back and wait for things to get better, because it's not fun to buy stocks and then you see that stock go down in price. So people are like, well, I don't want to buy stocks right now. It's funner when you buy a stock and then it goes up nicely. So that type of behavior is expected. This one's been doing well. So is the market going to continue to rise? If it does, they're going to continue to do well. The volume's going to be there. So I'm expecting these guys are going to have a decent balance sheet because they don't have to buy big machines or anything like that. They have a lot of cash, less debt. So we're good. They have plenty of cash. When I look at the overall fundamentals, and I forgot to look at cash flow. Look at that. So they have about $1 billion of free cash. They're growing nicely. They have about net $6 billion of cash. So these guys are worth like $36 billion in market cap. If you measure this cash flow, and they're really small cap. So this is an interesting stock to look at. The other stocks in their peer group, they're doing really well. Interactive Brokers, and I'm going to kind of do a combo because Interactive Brokers is a good one to take a look at here. I think this is here we go. So Interactive Brokers is down a little bit, but year to date, 44%, 1 year, 97%. See, this is similar to what we just saw with StoneX. StoneX is doing a little better from a percentage standpoint. And I think it's because Interactive Brokers is bigger, 28.5 billion, where StoneX was less than $6 billion in market cap. Revenues look good. These guys are more of a retail play, where StoneX is more of an institutional, kind of like, servicing other businesses that are in the financial services space. Interactive Brokers done great. They've probably, I don't think they've exceeded their valuation. I'll show you the valuation I have on Interactive Brokers, and then we'll come back to StoneX. Maybe do a valuation on StoneX while you look at the charts. So this guy here, when you look at the revenue growth for Interactive Brokers, it's gone up nicely. Look at that. And look at this growth. Even 22, they had growth. That's pretty amazing because in 22, it was a strong bear market. Like it was not fun to invest and see your money kind of lose value. But they kept growing. They've grown every year. That's pretty phenomenal. Looks really good. Profits have been there. Cash flows have been there. Look at that cash flow growth. Phenomenal. So overall, they have lower margins because they are just handling transactions. It's not like they're going to charge a big margin just to handle a transaction on their platform. And the forecast for Interactive Brokers, 8 analysts cover them. An analyst believes that, hey, they can go higher. And some analysts believe, hey, it's priced a little too high. On average, they think it's priced about 10% too high. And looking at the forecast for Interactive Brokers, they're expected to continue to grow, 6.8% in 26 and then 9% in 27 and have a contraction out here. But that's their best estimate there. Interactive Brokers is a solid stock. There's good choices in this space. This one here is one of a few choices. You have companies like Webull, eToro, Futu, Robinhood, and Robinhood is discounted. I have to hit refresh and it'll take me away from the screen, so I'm not going to do that. eToro is heavily discounted. Webull, I don't quite get why the market doesn't like this stock, but it's discounted a little bit. Dave is discounted a lot, in my opinion. XP down in Brazil discounted a lot. And Interactive Brokers is discounted. So these stocks are really doing well. No big surprise. I would say the investor population around the world is expanding. In the US, I think people are really realizing that they want to go on their own of picking stocks or picking investments so they can do a couple of things. One is be in direct control of their destiny when it comes to finances. The days of turn your money over to an advisor and they'll kind of manage your money. I think that's risky. You're depending on somebody else. You're not going to be as intelligent, experienced, and your skills as an investor will just not exist if you wake up and you're 70 years old and you're like, geez, I don't have any money. It's like, whoa, how'd that happen? Well, person doesn't even know. So I think young people, middle-aged people, older people realize they want to control their own financial destiny. And that's creating more activity for interactive brokers, Robinhood, Charles Schwab, eToro, you name it. And I heard a story on Monday coming out of China. In China, they say households save a lot of money. And the projection that I heard was they expect a 20% increase in trading volumes for stocks in China. Well, that was music to my ears because I own Futu, which is a big brokerage in Hong Kong. And that makes sense because households in China save a lot of their money and they can go to a bank and get a couple percentage points as a yield, but they probably have a friend, relative, neighbor that's killing it on the stock market. And they're like, man, I want to be a part of the stock market. I want to learn how to do that. I want to learn how to buy Alibaba and have that stock, reward investors by 50, 60% appreciation per year. I want that type of appreciation. And you're getting more and more investors into these platforms. So this business to me is a very fertile ground for good stocks. Now, looking at what I'm going to do is I'm going to turn it over to Daryl. And while Daryl works on the charts for StoneX and maybe Interactive Brokers, if you don't mind doing the combo, because Shadow Guy asked about Interactive Brokers, that'd be awesome. I'll complete a valuation on StoneX while you do that.
Okay. We'll start off with StoneX, and as you were talking about 2022, that's what I noticed on their chart is they didn't have the drawdown in 2022 like the overall stock market did. And over this 5-year period, they pretty much run from 23 up to 102. So that's really good over 5 years. Let's pull back to the 1-year chart. Looks like they've had a couple stock market actions. I don't know whether that's a split, but I saw 2 of them in that 5-year period. They're trading above their 20-day, their 50-day, and their 200-day, which are all upward sloping. They're not in overbought territory, so they still have a little bit of room to run there. They had a bullish crossover back around the 18th or 19th of August, so their PPO is in bullish territory. Their relative strength and relative momentum are both positive compared to the S&P 500. The accumulation is at a 1-year high. I didn't look at it on the 5-year. Looks like pretty much a 5-year high. The money flow is positive, and they've outperformed the S&P by 65%, the financial sector by 61%, investment services industry group by 45%, and that industry group is outperforming the S&P 500 by 15%. So you have a really strong performing company in a strongly performing industry group. This looks pretty positive to me. Looks like one to get into on a pullback and hold on.
Yeah, one thing I would note again is this is looking good. Agreed. But you also need to understand, in their peer group, are other stocks looking good as well? And I would say yes. So you get you're in a very fertile ground. I think it's a very good stock. Shop around, look at Interactive Brokers, look at Robinhood, look at, and see which one is the best one for you. Which one do you get the most? Which do you believe in the most? Which one offers a really good discount? But I agree with Daryl.
Then Interactive Brokers in 2022 looks like they ended the year about where they started, but they did have a drawdown in comparison to StoneX, the one we just looked at. So this is over a 5-year view. They're also at near 5-year highs on the accumulation distribution. They're trading above their 20-day, which had been on a slight decline. Looks like it might be rolling over higher at the moment. The 50-day and 200-day are upward sloping. Haven't seen a 50-day test basically since the 24th of April. So, and that has turned over from declining to an upward sloping. Their RSI is kind of right in the middle. Their PPO is about to the midline right now, just slightly above. The relative strength and the relative momentum is slightly less than that of the S&P 500. Accumulation distribution looks pretty good. They do have negative money flow at the moment. I would look for that to reverse. The S&P 500, they beat them by 72%. The financial sector by 68%. And the investment services by 50%. And the investment services is outperforming 15%. So once again, you have two companies that are outperforming their industry group, and that industry group is also outperforming the S&P 500.
Yeah, it's been a very good space to make money, and it's driven by this stock market, right? And more participants coming into the stock market. That's not going to slow down. I think that the times of stock investing is limited to those that maybe have a connection to Wall Street. Those days are kind of behind us. It's available to everyone that wants to put in the time and learn and get an account. And these capital market companies are flourishing. Let me come back to my screen and we will go over the valuation of StoneX. It valued really, really well. StoneX is discounted overall by like 76%. They're driving so much darn cash. They're driving almost $1 billion of cash, and they only have a $5.3 billion market cap. That's a lot of cash. If they did that for 5 straight years, they would generate their market cap. That's very high cash flow. So that just drives a really high valuation. They have plenty of cash, some debt. So overall, it just looks good from a cash perspective, and their earnings per share is just really, really, really good too. So in general, you're digging in an area of pay dirt. When we look at Charles Schwab, they've been doing well. And this is a stock that's gone up a lot. It's still a little discounted. But StoneX is pretty compelling. That 76 is really looking good. It's also a small cap, which to me, small caps have really been making it happen for me. Here's another small cap that's discounted. But I've been looking at Webull because it's a small cap. eToro is a small cap. I've started buying it. eToro, I don't know what it's doing today. It's primarily handles trading in Europe. I like that because I have Robinhood here. I have Futu in Asia. How about having eToro over in Europe? Not a bad idea. Futu is still discounted, and this thing's just been killing it. And then Robinhood is discounted, but it's based on cash flows. And this thing's just been on a rocket ship ride. So you're in a good zone. You're in a very good zone of of an industry and of a stock. I think this one's doing really well. I also like that they're not necessarily another brokerage business like a Charles Schwab. They're servicing institutional investors. So that's kind of different and could be within a portfolio. I could see myself owning this because it's not like Robinhood. Robinhood's purely a retail investor platform. They're not doing any institutional investing. And these guys are doing institutional investing. So I've got this thing as a watch stock with a little side note. It's watch buy in my book, which is watch it, get comfortable, and if you see an opportunity, maybe buy some shares. Thanks for asking about this one. I forgot who asked, but I appreciate it. Good idea. That's why I do live streams, so we can get really good ideas on stocks. I think it was Justin. Really good idea. Saeed, thanks for the idea on gold for investors. And then Shadow Guy, Campbell's Soup, and Interactive Brokers. There we go. Now, in a bear market, eating Campbell's Soup is probably a good idea because you're losing money on stocks. And Campbell's Soup's pretty affordable. That and Taco Bell. All right, so let's take a look at the market. What's going on, stock market? Are you going to be kind to us today after beating us up yesterday? Well, maybe it will. Look at that. Google up 8.39. That is a good day. What's year to date? What is Google looking like? Let me take a look at this here, see if it's updated. So these are the most expensive, valuable stocks on the stock market. And here's Google. They're year to date now at 20.88. It was a couple months ago that this was like near zero. It was like 3. Now it's like 21. Beautiful. This thing's been on a hot streak. Google has been on a hot streak. It's number 4 on the rank. I think they're going to take Apple's spot within a year, and then they're going to start competing against their number 1 competitor in the world is Microsoft. Microsoft is a little more old school. They have a cloud business. They have an AI business. They have a big software business. Google's a new school software company. And I think Google's going to go up the ranks. And we'll see. They'll have to see NVIDIA fade. And that could happen. I think that NVIDIA is priced a little too high. They have historically been a cyclical stock. The semiconductor space is a cyclical industry. And we'll see if that plays out soon or if it's just going to be a long-term, build out of this AI data center build out. So Google's looking great. Good job, Google. All right. So we've got Meta's up a little bit. Good to see. Uber's up a little bit. Apple's up a lot, 2.5. Amazon's up a little bit. Healthcare, mostly red, but not that brilliant red, which shows big losses. Energy is, man, I think they regret getting out of bed today because they're really down. All right, so that's what's going on. Overall, the indexes, what is that looking like? So the NASDAQ's up 0.8. Russell's flat, but that takes a little time to really look right. S&P's up a little bit. Dow is down. So that's what's going on there. All right. So I know we've got some comments coming in. Ben 10, good to see you. Thanks for joining. Justin, thank you, sir. Appreciate it. Little J, how you doing, man? You want to look at FICO? Can you look at FICO? You got it. So let's take a look at FICO, and that'll be our next stock. And then Ben 10, if you'd like me to look at Rexar, happy to do it, a super chat or become a member, and then I can review your stock. It's just part of being a member of my channel, similar to other members that are on. Their names show up a little different. And take a look, see if it's something you'd like to do, or if you'd like to buy a $5 super chat. All right, let's go to FICO. FICO does the credit scoring. If I guess credit ratings and stuff. So Fair Isaac Corporation develops software with analytics and digital decisioning technologies that enable businesses to automate and enhance and connect decisions in excuse me, the Americas, Europe, Middle East, Africa, Asia, Pacific. The company operates two segments, scores and software. Scores segment provides business to business scoring solutions. Okay. And it gives clients access to predictive credit and other scores. Got it. Okay. So they are classified as a technology and a software application. Interesting. Let's take a peek at their website. It's your FICO. Yeah, your FICO score. Got it. Okay. So this is, these guys have been around for a long time. And I'd be curious to, as we look at this, I'm going to think about AI. How's AI going to disrupt, change, hurt, help Fair Isaac Corporation? Year to date, stocks down. 1 year, down. 5 year, they had a great run. Oof, beautiful run. But they've had a rough year. Year to date, down 25%. Today, they're down 0.5. They are a $35.78 billion market cap business with revenues of $2 billion. P ratio is high at 58. Forward P is 44. Analysts think it's a buy. Now, if you have a high PE and you're growing really fast, we got no problem. You got a high PE and you're not growing, we have a problem. Let's take a look. They're growing. Now, they're not the biggest company we're going to come across. They got $1.9 billion in the trailing 12 months. They have $1.7 billion for fiscal year 24 that ended in September. Looks like we are in the finale of their fiscal year 2025, and they're going to grow by about 16%, which looks really good. Looks like they've accelerated growth. You see how it was anemic, better. Hey, why is this stock coming down then? It should be going up. But maybe the market read into this growth, bought into it, and then started to have second thoughts. We'll take a look. They're going to have very high margins. I'm guessing they're going to be like 75, 80% gross margins. I like that. High gross margins make for very desirable businesses. So when we look at free cash flows, those look very, very good. 775 million. Gross margins, 81.75. That is a desirable business in my book. That means that they make lots of money when they're selling their service in their case. And it makes sense, right? They're selling services. They have data. They use that data. It's usually public data anyway. So they kind of grab the data from public sources, but then provide businesses that need to make a decision that, situational information that they could use to make a good decision on the credit worthiness of a business or an individual. All right. So that looks really good. Cash flows look really good. So that looks good. The revenue looked really good for the current year. Let's take a look at the balance sheet. I'm expecting their balance sheet's going to be okay, but let's just take a look. They have $189 million of cash, $2.8 billion of debt. Now, how much debt to EBITDA? 3. They're right there at the limit. 3 is, where the limit is. 3.05. They're right there. No worries there. It takes them 3 years if they wanted to pay off debt. They really focus their EBITDA to pay off that debt. When we look at their forecast, we got 12 analysts covering them, and they think it's really discounted. Let's see what kind of forecast they have for revenue and so forth. They're going to keep growing. Now, their growth is good. I like the growth. I like the margins. I like the cash flow. I like a lot of things about this business. The one thing I don't like is the PE. Now, it's acceptable, but you could tell we're seeing a stock that's really appreciated and gotten to a high stock price because that PE ratio is really high. At their growth rate, right? I showed Google earlier. They were growing at 13 point something percent. And that's Google. They had a 22 PE. So now I'm looking at FICO and I have to pay a 49. Google is, in my book, just a safer bet, right? So that one is a head scratcher a little bit. Like, hey, would I rather buy Google or FICO? Well, let me answer that separately. All right, so the fundamentals look good, but the only thing that I'm seeing is a potential problem is the stock just got really expensive, and maybe the market is kind of selling it off because it's like, you know what, these metrics are looking too expensive, and it's selling off the stock, even though the business is performing well. It just got way ahead of its value. We'll see. I'll do a valuation. I'm going to turn things over to Daryl to take a look at the charts. And meanwhile, I will try to crank out a valuation on FICO.
So they have a declining 200-day moving average and 50-day moving average. About a week ago, the 20-day was declining and it turned over and rolling back up. But since the middle of November of last year, we have a series of lower highs, which is a bit concerning. I would like to, if I were looking to buy this, I would wait for it to at least get to a new high above here. So you're going to pay $300 a share more for it. But I would feel a lot more comfortable there because you have a $300 upside and there's not a whole lot of support here. I see some here at around 1100 and I see some at around 811. So I think your reward to risk ratio is a bit skewed to the downside at the moment. I'll be interested to see the valuation. The RSI is sitting at 57. It's not overbought. PPO is in negative territory. The relative strength is about that of the S&P 500. It does have a little bit better momentum. The accumulation is below its 52-week high. It's sitting about where it was in March of last year. The money flow just turned positive after 2 months in negative territory. It has outperformed the S&P 500 by 110%. The technology sector by 72%. The software industry group by 75%. And that industry group has outperformed by 19.56. So that's my thoughts on FICO.
All right. So perfect timing. I just clicked the last field on this. And Fair Isaac is priced too high by 42%. The cash flows, I mean, what is nice about this business is everything's trending higher. Revenue's growing, cash flow's growing. It's all the right things we want to see. Perfect. It's just it's short of its valuation. You saw the stock cranked up in stock price. It just got ahead of itself. And it's ahead of itself by a substantial amount, 42%. Again, we get choices in the stock market. It's not like Fair Isaac is the only business out there that's a software business. No, we have terrific choices. So, I shop around. I look around. Say, hey, what's the best deal out there for a very good quality business? Now, there's some businesses that have to be patient on and buy them at the right time. But this one here is just priced way too high, and it would be a solid pass for me. The other thing I would be concerned about is I would really, if I wanted to enter into Fair Isaac, how's AI going to change their business? Because AI is going to change their business. It's definitely going to change it. And it may be a case, what's a business that AI is completely made, very little value? Well, like, you remember how we used to have encyclopedias? Like, oh man, let's go get the Encyclopedia Britannica. And we can find out, all this information. Well, it's really hard to sell encyclopedias door to door now, because the person answering the door would probably get their phone out and go, you got encyclopedias? I got an encyclopedia right here in the palm of my hands. And that's an example of how technology will continue to give greater access to information and decision making. Maybe somebody comes out with an AI app that does everything FICO does today, but better for a fraction of the cost, and takes away their business. I'd really study that, but for now, this one's too expensive. So let me just note that I need to come back and update, because I'm going to keep this in the listing of valuations. So I think little J, when you want to take a look at this, I'll update this sheet probably in about a week's time, and then you'll have access to this and you can refer to the analysis that we just completed. And I just want to make sure I note that. All right. I think we're good to go there. All right. Okay. Moving along. We've got some good comments coming in. We got more people joining the stream. Cream Biggins, good morning, sir. Shadow Guy, appreciate the compliment. Cream Biggins, OPRA is up. Look at that. You changed your little icon. That's a pretty cool little icon there. And looks pretty good. All right. So OPRA is a browser company, really neat little company. And I wonder why they're up. Whoa. Look at this one, Daryl.
Yeah, sure enough. We talked about that last week.
Now, if you gave me 5 guesses, knowing what I knew about Google's information, I would have probably had a couple guesses that said, well, Opera is going to be trading down tomorrow. If you gave me those guesses yesterday.
Yep.
Because I imagine if they said, no, Google has to be broken out. But whatever. I own Opera. I own a small position, and 12%, I will take it. I will take it. And like that gain. See, this stock here, year to date, that wasn't doing much. 1 year, doing okay. 5 year, doing good. Doing good. Small cap, 1.6 billion. Now, why did this? Now my brain's kind of catching up to the story. Why did the stock go up? Well, if you're OpenAI and you're like, man, this stinks. My number one competitor against ChatGPT is Gemini from Google. And on the PC, or Chrome also runs on Apple's iOS for laptops and desktops. Most cases, somebody to access OpenAI goes through a Chrome browser. Well, that stinks. My user has to go through my competitor's browser to get to my app. I'd rather go buy Opera, and then I'll have my own app, and my users will know if you want to use Opera, it's optimized to run with ChatGPT. So maybe that's the story that investors are saying. The attractiveness or desirability of Opera went up because anybody who competes against Google that doesn't want their user base to use the Chrome browser, they can buy a browser that's operable, running right now. It is growing by 30%. It has margins. It drives free cash flow. It has margins. This is a good looking business that could be acquired, snatched up, taken over. And overall, in my opinion, is discounted. Fascinating. Isn't stock investing fun? We are trying to solve, we're like forensic stock investors. Why is OPRA going up? And look at this valuation. I think they're discounted by 52%, even after this price increase that we saw today. So I'm liking OPRA. I'm glad I'm a shareholder. And I have to think, I don't know who brought it up, but it was an attendee on a live stream or a member call that brought up OPRA. I didn't know what OPRA was. These guys are located in, I think it's Norway, and they primarily function in Europe, but it's a solid business that I decided, you know what, these fundamentals look too terrific. I am a buyer. I bought some shares, and I'm glad I did so. You have any comments on OPRA, Daryl?
Looks like they pay a dividend too.
There we go. Now we're talking. I should have
Yeah,
started with that.
now you're getting my attention. So
4.47% dividend.
Yeah, let me look at their
Now that
history.
explains why they're up 11.7%.
They do pay semi-annually, 80 cents per share on an annual basis. So they declare in June and December and pay in July and January. Okay. Oh, let's look at the chart. So let's see, this is 1 year. Let me go back just a couple more years. So looks like their high may have been 25 back in 2023. So they've yet to reclaim that. They are trading above a downward sloping 50-day and a downward sloping 200. Yesterday they closed below their 20-day, and today they're above all three of those major averages. We're only an hour, not even an hour into the trading day, and their volume is already above the 50-day moving average for the day. So they could have some volume. They could have some really high volume today.
Excellent.
Yep. Their RSI is sitting right around 61, so they're not anywhere close to being overbought. Their PPO is negative. They did have a crossover on the 18th of August. Relative strength, they're below that of the S&P 500. Their momentum is above. So in case you don't know what I'm talking about there, this refers to this quadrant here. So if their momentum is above that of the S&P 500, but their relative strength is less, then that means they're in this improving quadrant. So they were in a lagging quadrant, and now they're moving into an improving quadrant. Nice. So that's what that refers to, in case you were unaware. I like to look at this just so I know which quadrant things sit in. The accumulation distribution is weaker than it has been at the beginning of the year. The money flow is positive, but not really in bullish territory. You need to be above 0.05 to be in bullish territory, above this green line, horizontal line that I have there. Now they have outperformed the S&P by 11%. The technology, they just moved back to outperformance by 3%. They underperformed for most of July. The software group, they're outperforming slightly, and the software group is outperforming the S&P 500. So I'm going to put this one on my radar. I didn't know they paid a dividend.
Yeah, I'm glad I bought Opera. I don't have a giant position, but it's still fun to see it, fly up. It's the number one performing from a percentage standpoint. It's the number one performing stock in my portfolio today. Number two is Google. Number three is Reddit. Reddit's just been a fireball of success this year if you bought it at the right times, because that one's been up and down. But buying it at those discounted levels really turned out to be a good thing. All right, good stuff. All right, so let's I think we covered all the requests. Let me check in on the chat and see where we're at. So it looks like bonds. So comment on bonds right now. This is mostly stock investing, but yesterday was a really good day to invest in bonds, because when yields on bonds really fly up, you can take advantage of bond prices being low, and it's a good day to buy. And in my case, I bought bonds yesterday, which I'm glad, and then today they're up, so that's really good. For algorithm, thank you so much. So let's see here. For algorithm, hi Victor, thanks for sharing all your information knowledge. Thanks a lot, man. That means a lot. And Daryl, this is you as well, sir. I've learned a lot from you. I think I really like our format because I think it covers a lot of ground on stocks. I really appreciate the shout out for our algorithm. Thank you so much. So good job, Daryl. Thank you, sir.
Thank you.
So bonds, we talk about dividends, and as I get older, I do have a bond ladder. And what is that bond ladder? It's kind of like, it's like a boring part of my portfolio. And I like knowing that 5 years of my living expenses are in those bonds. The market can fall off a cliff, which it has. Remember COVID? Remember how far stocks fell off a cliff? Or the Great Recession of 2008? Stocks are just hammered. So I have that 5-year living expenses in bonds, because if events like that happen, it's actually going to increase in value, and I can pull from those bonds and figure out what am I going to do in the stock market, because it's going to be a huge opportunity. It's not going to be a, oh my God, the world's going to come to an end. It's going to be a, oh my God, I'm going to make so much money over the next 10 years, because stocks in that era, let's say we have another pullback, and I'm going to look at let's look at Google again. We got Google on our minds, right? So Google a couple of times, right? This was the .com bubble. I'm sorry, I looked at the wrong one. This is not. Well, I think because it's only going back to 2014. I guess I could work with this. So we had COVID and Google gets sold off, right? That's an opportunity. Now that was scary. Like, oh my God, what's going to happen? Then we had 2022. Google sold off. Opportunity. Because my money from that time, because I've owned Google, bought more Google in that time, it's gone up 156%. So that bond portfolio carries my expenses for 5 years. It gives me time to figure this out. Okay, where do I want to buy stocks? Where are stocks really discounted? So we're talking about bonds, and it's not because, I focus on stocks. I love stocks. I love real estate too, but it's not as interesting. Stocks is super interesting because days like today, we had Google go up, whatever it's up, 7-8%. OPRA is going up, kind of as a little tracer to Google. Well, I get to play with stocks, invest in stocks, analyze stocks, take chances on stocks, because my bonds have my back for the next 5 years. So that's how I have bonds be integrated in my overall portfolio. And that's why I pay attention to bonds. It doesn't take as much research. You just got to know bonds very, very well, which doesn't take a whole lot. No yields. And look at this guy here. This is a bond that Shadow Guy is suggesting, or just put it out as an example. 4% dividend yield. It's not bad. And you're taking very little risk, right? Because, in most cases, you look at who issued out these bonds. Bonds are a promissory note. You have a bond ETF, international bond ETF. These bonds are going to mature and investors will be paid back. There's few exceptions of that not occurring. So that's how I use bonds to kind of give me, it's kind of bonds are my protector in bad times. Boy, they look beautiful. They look great. In 2022, bonds looked, 2022 was a little different because interest rates were all over the place. But that's my point on bonds. Investors of stocks.
They're also a little higher on the security stack in case the company ever goes under.
Yeah, agreed. And I think as you get older, bonds become more important. I found myself 10 years ago at zero bonds, zero. And when I was a youngster, I could tell you some of the age old advice was actually a detriment to me. I could have done even better than I've done, but it was a lesson learned. Back when I was a youngster, 25 years old, investing, they had this rule, and I look back and I would say that it was bad advice. You're supposed to take your age, and basically that should be the bond allocation that you should be. So at 25, buy 25% bonds. Now, when I was 25, bonds actually performed quite well. You had Bill Gross, the bond king, still operating. I don't know if you've done any research on Michael Milken, Daryl. Are you familiar with the junk bond king?
Yeah, I'm familiar.
That guy was killing it with bonds, junk bonds. Well, those days were gone, like by, I would say, when technology became super hot leading up to the dot-com bubble, bonds were like not desirable, but the advice was still out there to allocate to bonds. Well, I kind of go, well, I don't know everything there is to know about investing. I was like 25, going on 30 years old. So I had some investments in bonds. That was a bad idea. So my sons, one's 25, one's 21. I do pass along the suggestion is do not invest in bonds. Wait until you're like 40, then start thinking about it. Between now and 40, grow. Learn to find high growth businesses that make high margins that are going to revolutionize the world. If you find a good 6-pack or 12-pack of those companies, you're going to build wealth fast. That's my advice to young investors in general. And that's what I advise my sons to do. And that's, I didn't have somebody to come over the top like that when I was a youngster, but here we are. We have a YouTube channel, and you can learn from a 57-year-old passing along life lessons and suggestions and where bonds fit in my portfolio. All right. Now that was a very good stream, Daryl. Can you do me a favor and tell us about your channel and where viewers could find your channel, view your videos, and so forth?
Sure. Let me so I can be reached on YouTube at the Investing Portfolio Pathway, and I also stream these to my followers, these same shows, and then I do a lot of videos on. Let me get out of my live section. do a lot of reviews on individual companies, especially before they do their earnings. I post quite a few of these videos, basically for all of the uh, companies that I hold in my portfolio. So you're welcome to join me there. I'll post the link in the chat window for you.
Perfect. Yeah, thank you, Daryl. I appreciate your review of charts. Um, charts was, looking at technicals. I've worked with other traders, I would say, like Trader Prad, and I love his enthusiasm. And I love, I'm a big fan of capitalism. If you work harder, smarter, and really create really good ideas, you flourish in the United States and in other parts of the world. And so I enjoy the mentality of traders, which is to try to go find ways of making money. And they use charts, but the way they use charts, they're trying to make money, you know, by 4 p.m. Eastern today. That's not my mentality. And you match my mentality, which is you're trying to achieve a longer term success, and you're looking at the patterns of stocks, you're looking at information that tell you what's going on. And that is a good combination with the way that I think. It's
Yeah.
a kind of blind spot that I have that you kind of fill in. So thank you for doing that. All right, everybody. So we are going to shut down the stream for the day, but we're going to be back. I'm hoping Daryl's available on Friday morning, and we're going to do the same time, same format. We're going to go over stocks, maybe review where we're at on Friday morning, see what we're going to be doing, or what has happened during the week. It looks like today is going to be, kind of a stock pickers day with Google up, Amazon up, Tesla up. It's having a good day. A couple of others like Apple is up, Broadcom is up, Booking.com is up. And we'll take a look at the end of the week, see what's going on. We may be in this September sell-off that tends to happen. We'll see. Maybe by Friday, we're having, 2 more days of data, and we'll be able to say, hey, look, we're in a little bit of a sell-off. Where are the opportunities? Maybe that might be a nice topic. But for now, Daryl, thanks again for everything. Everybody,
Thank you, Victor.
thanks for tuning in. Thanks for all the requests. Really good chat today. Really enjoyed it. Everybody, good luck with your investments and have a great day.
Thank you, everyone.